What's going on, everyone? My name is Lalit, and the news is out that the Dow 30 will have 3 companies leaving the industrial average and 3 companies coming in. So the stocks that are leaving are Exxon, ticker symbol XOM, you have Pfizer, ticker symbol PFE, and finally Raytheon Technologies, ticker symbol RTX. And what's coming in? You have Salesforce, ticker symbol CRM, you have Honeywell, ticker symbol HON, and finally Amgen Incorporated, ticker symbol AMGN. Today, we're going to talk about the stocks that are leaving, the stocks that are coming in, and what next steps you may want to consider. So with that, let's get straight into it. Before we get into the graphs, I want to explain what the Dow 30 is for anyone who doesn't know. Feel free to forward to the timestamp, check out the description below. The Dow Jones is officially known as the Dow Jones Industrial Average. It comprises of 30 stocks that represent the American economy. And that's why you may have heard it, but it's commonly also referred as the Dow 30. If you've seen CNBC, there are the 3 indexes or indices, and they go by DJIA, you have the S&P 500, and then you have Nasdaq. So it was formed in 1896, and the 2 names you hear, Dow and Jones, they're from Charles Dow and Edward Jones. And Edward Jones, you may have actually heard of that company, which deals with financial services and wealth management and has financial advisors under its belt. Anyhow, let's get straight into the graphs and the charts to see how this news and how this change actually affects the future of what is the Dow Jones Industrial Average. To start us off, we'll talk about the companies that are leaving the Dow 30, and then from there, we'll go on to the ones that are joining it. So we have RTX, Raytheon Technologies Corporation, and looking at the graph, basically, it's a beautiful graph. It's been growing at a certain pace for X amount of time. And looking at that period of 2012 to 2018, it looks almost as if we're exactly where we were 8 years ago. And so this could be one of the reasons it may make sense for it to be leaving the Dow 30. But more than that, earlier this year in April 2020, United Technologies had a merger with Raytheon. And so this is the new name, RTX, Raytheon Technologies Corporation. And so this merger may have been one of the reasons for it to leave the Dow 30. But looking a bit deeper, it's a beautiful company. AKA, if it were to leave, is it still a good investment in terms of a company, in terms of the dividend that it pays, and more? So looking at its dividend, it is classified really as a DJI stock, aka a dividend growth investing stock, with a streak of 27 years and in the last 5 years of a CAGR, compounded annual growth rate of 4.49% with a dividend yield of 3.15%. And it's quite safe all around, according to Seeking Alpha, that is. Disclosure, I do own RTX. Here we have Exxon. So looking at the graph, basically there's a huge run-up from its inception all the way to around that 96 period of 1996. And again, you see it happen from 2008 to 2007. But what I want to say here is the graph shows it basically around that 2010-2011 period, from then all the way to 2019 pretty much, before the Rona earlier this year. It really hasn't moved much. But what's important to point out is that Exxon is a crowd favorite because of its dividend and its dividend growth. So according to Seeking Alpha, it has a 19-year streak and it pays a huge dividend in terms of yield at 8.49%. It shows green below at the dividend score, but recently, to my knowledge per se and research, I've seen that the payout ratio was above 100% for Exxon, but I do know that they did some debt restructuring to get that payout ratio lower to appear that it's safer. But in the end, is it really that much safer? It's debatable. And that could be one of the reasons that it was a decision for it to be gone from the Dow 30. Finally, we have Pfizer. So Pfizer, it has a huge run-up all the way up until that 98 type of period. And it kind of stagnated / kangarooed around that 97-98 period all the way to around 2005-ish. And fast forward 15 years, we're pretty much at the same levels, still in that range around above 40, little below 40. And looking at the dividend angle, it does have a beautiful dividend growth of 10 years and a dividend yield of 3.91%. And CAGR-wise, in the last 5 years, a growth rate of 6.72%, which is pretty phenomenal if you're looking at it from a dividend perspective specifically. But from a growth perspective, it isn't really there. So it speaks for itself, for better or worse. And it may have been a good decision for it to leave the Dow 30, aka Is it really saying that the American economy is growing? From the graph, it's not adding that value to push the average up, in my personal opinion. Coming to the three stocks that'll be joining the Dow 30, we have Amgen Incorporated. Looking at the graph, it has that huge run up around from that 2010 all the way till date period. And it was stagnant after 97 and in the beginning of 2000-ish for around a solid 10 years, but it's definitely proved itself as a strong stock, especially in these last 10-ish years. So what I want to compare here is that Amgen Incorporated is a biotech firm, and it being in the biotech industry, it's coming in and it's replacing, in my opinion, kind of like Pfizer, because Pfizer is research-based pharmaceutical. And in terms of industry, it's replacing it, and it's not a one-to-one match, but there is some similarity. But in terms of company and growth and meaning behind what it could add to the Dow 30, Amgen definitely has that value. And when we look at the dividends, it has a dividend growth for 8 years. And in the last 5 years, it's grown its dividend 18.91% year over year, which is crazy. That's insane. That's close to Texas Instruments, and I'll leave that for a different topic for a different video. But it has a dividend yield of 2.69% and a dividend score that looks pretty healthy. Next, we have Honeywell International Incorporated. Ever since that 2008, looking at the graph, it's basically been up and up and up. And even though the Rona happened earlier this year, it's almost back at the levels it really was at. And looking at the dividend, basically a 2.29% yield. Yes, relatively, it's not the best when you look down at the dividend score section, but it's been growing that dividend for 16 years, and look at that 5-year growth rate, 13.58%. That's phenomenal. And from an industry perspective, I do want to compare it how RTX, Raytheon Technologies, industry-wise, it's involved with aerospace, defense, electronics, and information security. And then on the other hand, you have Honeywell, which is technology and a manufacturing company, and it also has 4 segments, which I want to highlight here. Its 4 segments are aerospace, home and building technologies, performance materials and technologies, and safety and productivity solutions. That last part, safety and productivity solutions, sounds kind of similar to information security that RTX does. But from an industry perspective, coming back to the whole topic of this video, Dow Jones Industrial Average, it's one of those where, again, it's not a one-to-one match, but I do say there is some similarity, which is something that I just want to highlight. Finally, we have Salesforce.com, ticker symbol CRM, aka Customer Relationship Management. It's a tech company at heart, and this tech company, look at this, before 2005 and all the way to today, that graph just keeps going, reaching all-time highs. The Rona hits and it rebounds like anything because it is the tech stock that it is, and it's so valuable in terms of application and where it's coming up in corporate America and its utility in just America in terms of the economy in general. And in terms of dividend, it currently doesn't pay one, but that's not really unexpected given the nature of the industry it's in terms of tech. When you take out Microsoft, when you take out Apple, most other tech companies, they don't indeed pay a dividend, and I think it's a great addition to the Dow 30. To wrap us up, I wanted to go over the price action that's happening based on this news to the stocks that are leaving the Dow 30 as well as for the stocks that are coming in. Looking at Exxon, it's down 2.3% after hours. You have Pfizer down 1.26%. You have Raytheon Technologies Corp down 2.96%. On the other hand, you have Salesforce.com up 3.04%. You have Amgen Inc. You have up 4%. And you got Honeywell International Incorporated up 3.85%. So what's the point here? What's the next step? What's the right decision to make? It all goes back to the personal investing strategy. Whether that's dividends, growth, value investing, it just depends on your personal investing strategy and goal. For example, what happens to RTX? Is it a good time to sell it because it's leaving the Dow 30? What about XOM? What about Pfizer? Looking at Raytheon, it has that 27 years of dividend growth in terms of a streak. Exxon, you have that 19-year streak, and you have Pfizer as well. And so in terms of dividend, if that's your play, then it could make sense from a consistency standpoint. But there's also reasons one may not want to, maybe due to fear and maybe due to when the goal is in terms of whether that's short-term or long-term, and just understanding how to hedge your investments and overall just understanding what is the future going to look like and how does that relate to you from a financial perspective and the stock market. So On the other hand, when you look at stocks and when the last time this happened in terms of something leaving the Dow, right, a stock, it was actually in June of 2018 when Walgreens replaced GE. And a funny fact is that the GE, so the General Electric, it was actually a part of the Dow 30 in 1896 when it was first incepted/founded. And so fast forward, it was actually removed twice between 1896 and now it's 2018, and now it's actually gone from the Dow 30, officially speaking. And so the point is those 30 companies do represent the American economy in the end. And if a company is making a comeback, it can really join that Dow 30 again. AKA, RTX can come back. Pfizer can come back. There are companies that can come back into the Dow 30 and companies that can leave the Dow 30. So in terms of selling off just because of the news or buying extra because of the news, I think that in terms of all the companies discussed, they're all solid companies, and there's a reason why they've been considered to be a part of the Dow 30 and will be considered potentially in the future too, because in the end, the Dow 30 comprises of blue chip companies, which pretty much all of these companies are. And so in the end, it all depends on personal decision, not a financial advisor, you know the drill, but to each their own, and it depends on their goal, their strategy, and next steps accordingly. Thanks for coming to the end. I wanted to leave you all with a little surprise. It's a little beatbox, so I hope you enjoy it. And if you found value, please leave a like, subscribe. Here it goes.